Alright, let's talk about the day. Sorry. My eye was itchy. So, going into the day, I was bearish. Why was I bearish? We were on the 4-hour, very bearish, as well as on the 1-hour, we were very bearish as well going into market open, meaning that this could be a continuation trade if we do not sweep any main draws on liquidity to the upside, such as hourly highs, 4-hour highs, and session highs. The closest high we had was right here. So as long as we didn't sweep that and we got a sweep of just 5-minute highs and then either a inverse fair value gap or a break of structure back down, that's what we were looking for. And as you could see, we swept it out pre-market right here, swept out this 5-minute high, came down, broke structure right here to the downside. I had my stop loss right here above or at the high, and I had my main draw on liquidity. There really wasn't much to go off of. As you can see, this was the closest hourly high that we had, or hourly low, because this right here just wasn't, it's kind of already too far. It was too far up. And also, I don't count session lows when we're that fucking deep. I only really do hourlies and 4-hour lows. So that's what I did. I risked 2.41. It took a long time, mostly consolidated for a good amount. And then just about at 11 a.m. is when we started to actually dump. Got out of the trade at 2 p.m., risked around $200 or $260, something like that, $250, $260. Between that range that I wanted to risk. And won $550 something, $557, I think. What does that mean? Just me building my buffer. That's all it is. It could be something different if I wanted it to be, but to be honest, like, technically I like, if I keep doing well and I get a couple of what's it called? If I get a couple of winning trading days, I can get a payout. But sorry. Okay. I just wanted to see what's going on here on the PA charts. I just want to see what's going on. Okay. So, I think I could show you this. I don't see anything bad. And this is just the name. So, yeah. This is the P&L, $568 or $557.92, because technically I won $10 on the first trading day or whatever the fuck. I mean, it really wasn't anything. So the next level they have, I need to get to 51,500, and that way I'd be able to risk more. But I'm not gonna risk more because I know that, what's it called? That shit's gonna get really expensive. Okay, I just want to see here though. Active, no, not active evals past. What am I looking for? Active PAs. Let's see. That's the certificate. You know what? I want to look at let's look at Apex's rules together. Can we? Let's look at Apex PA account or PA 50K EOD rules. Okay. So it is okay. No today trailing breach. Payouts are limited to 13K per account. $1,000 daily loss limit. 50% consistency rule for payouts. So payout rules. How many trading days? That's my question. So minimum of 5 trading days with a $250 net profit to qualify for a payout. Okay. So 5 minimum trading days. But I'm just looking at this just to know. But what I'm most likely going to do, like I've been planning on doing, is building a big buffer, getting this to 55,000, not increasing how much I'm risking until I get to where the drawdown is capped. So I think it caps. Well, let's look. Apex PA account drawdown cap. Where does it cap? $50,100. So this means I'd have to get to $52,100. Okay, 100 profit. And then after that, once I start increasing, most likely every $500 of profit or every $1,000 of profit, I'm gonna increase how much. I'm probably $1,000 profit. I'm gonna increase how much I'm risking. So instead of risking 200 to 300, I'll risk 300 to 400, and then after I'll risk 400 to 500, and then 500 to 600. In that range, right? And once I get to that, right, I will already have the trading days, because it's gonna take probably about a month to build this buffer, because playing with $200 in the beginning, only risking that, I'm not gonna be able to make that much, money at first, profits, because only risking $200, but I'm doing this to play it safe, right? I'm using my risk management to my advantage to try to get this payout as safe as possible. I'm not going to be over leveraging. I'm not doing any of that. I'm just going to be doing the fucking $200 plus, whatever, regardless. So, hey, though, that's the whole day. Not much else to talk about. As you can see again, let's go through it one more time. We had the continuation trade right after market open. 5-minute candle came down, inverse this fair value gap. Well, it would be this fair value gap because it's the farthest one. And on, if I'm not mistaken, yeah, we could have taken this on NASDAQ because it broke structure if we wanted to. I didn't like NASDAQ's draws on liquidity because the closest one that actually made sense was this one. And to be honest, that is deep as fuck. That's deeper, it's deeper than what I had on the other one. 1,000 tick move. I mean, yeah, we hit it, but this is only 200 tick move right here. Regardless though, but hey, I really love y'all a lot. I appreciate y'all so much. We're just gonna keep it going. Follow the rules. Don't put put enough don't put too much pressure on myself, and just kind of breathe and take my time, because that's what it takes. But I love y'all. Talk to y'all. Peace out.